Well, Ken, you made a video about 7 months ago that I just found really intriguing. It was titled "The Real Estate Housing Crash Quarter 4 of 2021." And now, obviously, we're currently in, the September, October, the fall area of this year. Has your stance remained the same? And you mentioned a lot of great things in that video, but I'm curious to kind of hear your thoughts on the real estate market for, Q4 of 2021, now that it's been 7 months.
Yeah. Sure. Well, there were a few things tracking at that time. Obviously the eviction moratorium, which I was caught right in the middle of. We have 10,000 tenants, so we had that going on. Not to mention the fact that I was connected with millions of other guys that own millions of other units at the National Apartment Association level, and so we're trying to figure that out. And we had thousands and thousands, as you know, people that are delinquent on that. So we had that, and then we had the forbearance, which everyone knows about, which basically, and that's been all over the map in the millions, as you also know. So all of those have now come to an end, and well, at least let's put it this way: that it doesn't look like they're going to get renewed again. So I felt like at some point the rubber's going to hit the road. The mask mandates were gone, although I think they're creeping back in now. But so it looked to me like there was people were kind of getting back to some kind of a normalcy, and so I felt like, and I still do feel like, we're going to see this surge of people moving, in the fourth quarter, and I still think that's happening, and we're actually seeing it a little bit on the rental side already now that they decided not to extend that. So, but in addition to that, I think there were a lot, as you know, one of the reasons the housing market soared was because people didn't list. They were uncertain about where they're going to be, and they were looking at, well, now I can work from home, and there's all these things happening. Plus, with COVID and all those kinds of things, they were afraid people going into their homes, and there's all this, and so now they've gotten this incredible benefit of increased equity, which is really a good thing. And so I think that's going to help a lot. I think the fact that people have a lot of money in their homes in the form of equity, they might be cash poor, but they're equity rich. They're house rich, cash poor, and so that's going to soften it, but it doesn't eliminate the fact that they still have that debt. So they still owe, all that back rent. They still owe all those mortgages. Those aren't forgiven, and there's no discussion around that. So I do believe that we're going to see, and we're already seeing some markets like Boise, Idaho has peaked, and we're starting to see the more listings come there, and that's also an affordability issue. Washington D.C. Some of the areas that are still hotter than hot, are still kind of out in that sort of northeast, like Charlotte, some of the Florida markets, and I think a lot of that has to do largely with, and like we straddle the line of not being too political, but you kind of have to talk about policy, and the fact is people are moving to Texas and moving to Florida right now. And that has a lot to do with who their governors are, and so like it or not, I have a lot of friends that have moved to both of those spots, for tax reasons, for safety reasons, and for freedom reasons, and all those kinds of things. So the migration patterns are changing all over the place, and I do still think that we're going to have some crashes for sure in areas, but other areas, I don't know, as you know, the housing market is not a national market. It's a very localized market. And so you can have one market that goes up and another market that's going down at the same time, and say that, there's no crash. So,
yeah. Yeah. And I think, living in my home state of Illinois, I've definitely, to your point, have thought definitely a lot about leaving because of the political, environment here, and a lot of stuff that I just don't agree with, just based on how I grew up and what my beliefs and values are. So to regurgitate, Ken, you mentioned a lot of stuff based on local markets crashing, which I definitely agree with. You mentioned the idea and the concept of individuals being, so cash poor but property rich, and you combine that with potential new listings coming in, and those three things are really what I kind of heard you say. How do you see that playing out in the fourth quarter of 2021? Considering in the video you made 7 months ago, I know you said, and I love the analogy you use, right? The great Wizard of Oz, Joe Biden. What is he going to do? He's going to continue to pump cash artificially into the market. That's going to be the big question. How do you see that playing out in the last quarter of this year, and potentially maybe even a negative and crashes happening in different markets, the first wave maybe happening in 2022?
Well, first of all, I think that there are going to be markets that don't recover for a long time, and those are the ones that come to mind are New York, LA, Seattle, Portland, Chicago, right? Those markets, though they're undeniably in big trouble, in my opinion, and so they're sliding. San Francisco, what's happening is they're a lot of those people have moved, but they've moved not very far. If you look at, I think it was 70% of the people actually didn't move out of state. They actually moved, within their own states, but kind of to the suburbs where it was, let's say, twice as, a little more reasonable for them financially. So I think that you're definitely going to see crashes. I do believe that. I think you're going to see permanent damage in some of these big markets. On top of that, let's take a look at the work and the kind of the office landscape. And I think that's an important factor. So, I have friends that are with big firms in New York. I have one that his rent is $100,000 a month, at his office building in New York City. And I have friends actually that own businesses in Chicago, Seattle, Portland, San Francisco, LA, and they're not even going. Some of those big office leases, as they start to wind down, you're going to start to see non-renewals go into smaller floor plates, and so why is that important? It's important because the way people work and the way people run their companies are different now. And they're going to stay that way. And so, there's kind of hybrid models, and some people, like the big companies, like Twitter and Facebook, they're saying you don't need to come at all. And so there's all this stuff happening, and everybody, we can go down this rabbit hole for a while, but the point is, that's going to change things. So you imagine, I was talking to one guy in New York, and he said, there was 10,000 people a day coming in and out of this office building that he's in. He was on the 30th floor or something. And now it's less than 1,000, because, and so everything you can imagine, the coffee place, the ATM machine, the lunch place, the happy hour place, and, the restaurant, everything that everybody pours out to, all that's affected. Now, I'm just talking about urban core at the moment. But, when you start to gut all of that out and people get pushed to the suburbs, it's going to affect pricing. It's going to affect commercial office. It's going to affect condo prices and downtown living. And then ultimately what's going to happen, in my opinion, is they're going to have to raise tax because, all that stuff gets taxed, as every single thing, whether you're parking a car or eating or whatever it is, or and so that all pays for stuff. And so what's going to happen, that's kind of the next ripple is we're going to start to see these, these property tax increases, sales tax increases, these taxes, they're going to have to tax people that are still there to pay for what's left. But what's interesting, so you're going to have, I believe, you're going to have some real issues in some of those downtown cores. And I haven't even touched on the safety issues. I was in Seattle and Portland and LA in the last 2 months. And, it's a mess. And, you can throw money at it. As I know you guys talked about that UBI. I was in LA during that time. It's a pilot program, but it's still a program, and people can get $500 to $1,000 a month, no questions asked. That is a form of UBI. So that is still going to continue to come, but it doesn't fix that underlying issue. And it's also, that's an affordable play. And so, they're gonna start to throw money at some of this stuff. But I really think that you're going to start to see a continued downslide of, some of these urban markets. And as those corporations figure out where they want to be, because I know like some of the big boys are even looking at moving to other markets completely, like Miami. I know there's been some talk of some big financial names actually moving their entire corporate footprint from New York to Miami because of the safety issues and because of the tax issues and the policy issues that are going on. So all that's going to play out over the next few years, and it's really going to change real estate a lot. And so that's kind of what I'm trying to teach. Is, there's not one big crash. There's a bunch of small stuff going on all over the place, and all you want to do is try to be in the front of it, and not be a pioneer. And there's going to be tremendous opportunities, I think, and there still are. We're still buying. We just put a deal out yesterday, and we're buying in Austin, Texas right now. We just closed on a deal in Houston about 3 months ago, and so there's pent up demand in areas and too much in other areas.
Yeah. No, congratulations, by the way. That's amazing. You're closing those deals. And no, to your point, you said a word that really caught my eye. You said ripple, right? And I think that's something that a lot of people don't think about when it comes to, these small quote unquote problems. They ripple out, right? Because it's not only kind of like what you said, the ancillary businesses around those office spaces that lose customers, but it's also the landlord, who's now not able to pay the debt service, and that affects the investment company that invested into that mortgage. And I mean, there is such a big ripple. So for you, you mentioned something very interesting: stay in front of it. So in talking about, I guess, the housing crash, and the last question of this topic is, how do people do that? How can regular Joe Schmo like me and you, how can we stay in front of what's happening with these moves?
Yeah, it's a great question. So I know you do this too. Every news article, everything that's happening, like people look at it and they freak out because it's happening, whatever that is. And I look at it as, what's the real estate impact from that? So I'll give you an example. We bought a piece of land south of Tucson, and we broke ground on a property. It's a 300 and some unit property down there. And at the same time, Amazon was assembling 23 acres within a block, for one of their distribution centers and one of their call centers. Now, that's Tucson, Arizona. It's not on really very many people's radar, but that is when Amazon announces that they're going to be here, or a company says, we're going to close this base, a military base, or we're going to build this stadium, or we're going to move Boeing from Seattle to Chicago, let's say, which happened. Those are there's real estate implications behind all of that. As there's expansions and contractions of things, then what it does is it puts pressure on markets. And so that's what I mean. And these are, real estate is dumb. Like, it's so slow moving, like it's so slow moving. Like if Goldman Sachs wants to move to Miami, and they've already talked about it. Now, I don't know if they're going to, obviously, that's a big decision, but that's going to change things, obviously. So, and whether they do or not, and when there's guys like Musk and Oracle moving to Austin, Texas, that's changing things. It's changing that local market and hurting a market that they're coming from. And that's what I'm talking about. So as you start to look at things that are happening, and try to stay out of the political opinion stuff and the real factual stuff, that and we're going to see it a lot more, I believe, as you start to see some of these leases renew, these big office prices. I don't know if you saw Pinterest. Pinterest wrote a $90 million check to get out of their lease in San Francisco. You got Salesforce there, and you got a bunch of big businesses there, and people are afraid of the safety in San Francisco, as an example. Mm-hmm. So they're having a tough time getting employees, and those are all ripple effects. And so what happens is, as a business owner like yourself, you have to make decisions, to be able to run your company, whether that's from home or from a safer location. And you're always, that overhead is fixed. It's not necessarily good. And at one point, when there was a reason to be in downtown San Francisco or a reason to be in New York City, I think that reason's largely gone. And so that's what I'm kind of saying. And so those are real estate opportunities as those companies, as those people start to relocate, and the migration of those folks, it's going to continue over the next few years.